Hi, my name is Brian Schneider and I'm an MBA student at the University of Illinois and also a member of the Cole Foundation. And I'm here to briefly talk to you about the financial projections section of the business plan competition. And the financial projections is broken out into three main statements: the income statement, the cash flow, and also the balance sheet. The income statement is broken out and is summarized by one main equation, and that's your income equals your revenues minus expenses. And you can determine revenues specifically by breaking out the quantity and the price for the goods that you're selling. For example, if you're selling tacos out of a taco truck, your quantity would be how many tacos you expect to sell perhaps per day, and then your price would be if you're selling tacos for $2, you can derive your revenue. For example, if you're selling 100 tacos a day at $2 per taco and you're open 5 days a week, you can expect to make $1,000 a week. You also want to consider your expenses. You want to consider fixed expenses and variable expenses. Your fixed expenses are expenses that won't change no matter how many tacos you sell. For example, the rental price for the truck or the real estate. Variable expenses include things that change with how many tacos you sell. For example, the ingredients or materials that you use to sell the tacos. So once you determine your revenues and expenses, you can subtract the two and determine your income. Specifically for the business plan competition, you have to come up with monthly projections for the first year. And you can use this simple approach to come up with how much money you think you will make on a monthly basis. The next two statements are the balance sheet and cash flow statement. These are a little less important for the business plan competition, but very important for financial projections. Specifically, the cash flows is just a summary of the inflows and outflows of the business. How much money you expect to come in the door and how much money you expect to pay out. For example, your revenue that you come in from operating the business will be your inflows, and outflows could consist of any payments that you make to pay bills or your wages to your employees. And the last statement is the balance sheet. The balance sheet is simply an overview of what your company owns and then what they owe. For example, assets would consist of any materials or inventory you own, or if you own the truck. Liabilities would include any payments that you may owe to salaries or to electricity bills. And then the difference between the two is your equity. And so the equation is assets equals liability plus equity, and equity will represent the value that you hold in the business. So if you have any additional questions or looking for additional research or resources, I recommend that you take a look at these links here, or you can reach out to the Cole Foundation at info@colefoundation.org. Thank you.